Hello everyone, welcome back to Stanchain Crypto. Last week, we told you the market finally had a catalyst. The jobs report came in far weaker than expected, Bitcoin pushed higher, and suddenly everyone started talking about rate cuts again. Let's see. What, this week? The market gave us another surprise. Inflation cooled. The Fed got a little more breathing room. Bitcoin should have loved that. Instead, Bitcoin went nowhere. And that's the part people need to pay attention to, because when the market refuses to react to supposedly bullish news, something is wrong. Bitcoin is back around the $63,000 area, while Ethereum and altcoins are struggling to find a clear direction. ETF flows have also started turning negative again. So, let's break down what actually happened this week. Let's start with the obvious. The July inflation report came in at 3.4% year over year, down from 3.5% in June. Core inflation came in at 2.5%. That's the kind of data Bitcoin bulls normally celebrate. Lower inflation means less pressure on the Federal Reserve. Less pressure means the possibility of easier monetary policy. And easier monetary policy means more liquidity for risk assets. Sounds bullish, right? So why isn't Bitcoin flying? Because as we previously said, markets don't trade on headlines. They trade on expectations. The market was already expecting inflation to cool. So when the number arrived, there was no massive surprise. And here's the uncomfortable part. Bitcoin is telling us that softer inflation alone isn't enough, because last week we said the weak jobs report could give the Fed more room to ease. This week, we got another piece of data pointing in the same direction, and Bitcoin still can't break away. That's not necessarily bearish, but it is a warning. The market wants more than promises, it wants confirmation, and until it gets it, don't celebrate. Now let's again talk about something that should matter to every crypto investor. Regulation. Last week, we told you the CLARITY Act had been delayed. This week, it got even more interesting. The Senate went into recess without advancing the bill, pushing the next major fight into September. The legislation is facing a much harder path than the crypto industry originally expected. But then, something else happened. The SEC canceled its scheduled meeting that was supposed to discuss new crypto regulations. No new date, no immediate replacement, just canceled. The SEC says it was due to an unforeseen scheduling issue.
You're kidding, right?
Well, you've got Congress delaying legislation and the SEC delaying its own crypto rulemaking. That's not exactly the regulatory clarity the industry was hoping for. But again, Bitcoin didn't collapse, and that's important. The market is telling us regulation is currently less important to price than liquidity and macro expectations.
If you want signals like this for free, follow me on X and stay in tune with the latest trends and news in the crypto world. I post some of my intentions and trades every day, so if you feel capable of taking a beating from the market, get in.
Now let's talk about something that actually changed underneath the surface. Bitcoin ETFs had a strong start to August. Bitcoin and Ethereum ETFs pulled in roughly $1 billion in a week, and everyone started getting excited. But then the flows reversed. Bitcoin ETFs recorded back-to-back outflows, including roughly $131 million on August 13th. And Bitcoin is struggling at the same time. Coincidence? Maybe. But here's the point. We don't need to scream that institutions are buying every time an ETF has a green day. That's lazy analysis. Flows change, demand changes, and when the price stops responding to positive news while ETF flows weaken, you pay attention. Where's what I think everyone is missing? Last week, the market finally woke up. This week, it woke up and then went straight back to sleep. We had weak employment data, we had softer inflation, we had expectations for a less aggressive Fed, we had strong ETF inflows at the start of the month. Yet Bitcoin still can't convincingly escape this range. That's the signal, not the headline, the reaction. Because the market doesn't owe you a pump just because the news looks bullish. And if Bitcoin can't rally when the environment looks supportive, you have to ask why. Maybe liquidity is still too weak. Maybe traders are waiting for the Fed itself. Maybe the good news is already priced in. Or maybe we're simply not ready for the next major trend yet. That's why we're not chasing this move. Now let's check Stanchain's previous predictions about the current market. 2 weeks ago, we gave you this chart, which for now seems correct till Bitcoin does not break out above $65,000 again. Last week, we said the jobs report could become the catalyst that finally wakes the market up. It did. Bitcoin moved, but we also said the real test would be whether Bitcoin could hold the move. It didn't. Though the prediction was partially confirmed, the catalyst arrived, the follow-through didn't, and that's valuable information. Now we're looking at next week differently. We're still cautiously bullish, as you can see, our shirt color, but we still need confirmation if Bitcoin can reclaim and hold the important resistance above this range, while ETF flows turn positive again and macro data continues to support easier policy. Then the market could finally transition into a stronger trend. But if Bitcoin keeps rejecting higher levels, if ETF outflows continue, and leverage starts building without price following, then don't be surprised if the market gives bulls one more nasty shakeout and confirms our first plan. We're not predicting a number, we're watching behavior, because anyone can predict a pump. The hard part is knowing whether the market is actually ready for one. Subscribe to our YouTube channel and stay updated every week, or follow us on X for amazing signals and insights every day. And remember, if everyone already agrees, you're probably too late. We'll see you next week.